The quant geniuses who rose to fame in the last 2 years made so many bad trades that they lost their stolen money in the market that they made on a regular basis.
Mostly we think of ourselves as a liquidity provider, so we just, whatever people want to trade, we want to be there to help them trade and get better prices. So that can mean trading on exchanges, putting out scales, doing arbitrages between exchanges. Could also mean trading OTC. We have an OTC desk where you can send us a message in chat and do a larger trade that you might not want to execute on an exchange. We also do market making for token projects, ensuring that they have sufficient liquidity for their coin, and also providing on a bunch of kind of DEXs and DeFi lending protocols.
As a market maker and playing on a cheat code, Alameda Research CEO Caroline Ellison lost the money trading cryptocurrencies, and worse at all, it was the money stolen from FTX customers. They stole the funds by creating a backdoor, and Sam Bankman-Fried was the one who directed the co-founder of his cryptocurrency exchange FTX to build this secret backdoor that allowed his hedge fund Alameda Research to borrow $65 billion from clients without their knowledge. Gary Wang created this backdoor by inserting a single number into millions of lines of code for the exchange, and the size of that line of credit, it was $65 billion, creating a line of credit from FTX to Alameda, to which customers did not consent. The backdoor was a secret way for Alameda to borrow from customers on the exchange without permission. When those funds got to Alameda, they were used for FTX promotions so they can get more clients to steal from. We already covered this part. We will leave the video in the end screen. Please check it out after you're done watching this video. And they also use that money to place riskier bets in the market.
Being comfortable with risk is very important.
Alameda at its founding was a market maker for low liquidity altcoins. It took a market-neutral approach to the industry, but eventually began taking a more participatory role in crypto and increasingly bullish or bearish leveraged bets on specific coins. This includes yield farming on decentralized finance protocols. As a quantitative trading firm specializing in cryptocurrencies, Alameda's strategies included arbitrage, market making, yield farming, and trading volatility.
We do some discretionary trading as well, and we do trading where we can't always hedge our exposure. I think we kind of tend to hedge our exposure by default unless we have a particular opinion on the coin. If we just buy some whatever Bitcoin in our scales somewhere, we'll probably try to sell that out somewhere else by default. But if we have opinions based on events in the market or based on kind of trading patterns or flow that we've been seeing, we definitely might put on discretionary positions as well.
FTX borrowed money from customer accounts to finance betting through Alameda, and Alameda had already built a reputation of being the cutthroat risk taker. It would ruthlessly dump tokens, sell things whenever it wanted, and had no control, and Caroline Ellison became the subject of online speculation. Alameda started facing losses between May and June 2022. The digital currency market was in a free fall. Panic gripped the investors. They started pulling out their funds from FTX frantically, even amidst assurances from SBF and Ellison. The FTX document that Ellison shared with a number of FTX staff members during the crypto crash, when she was experiencing a technical problem with her personal trading account. Caroline Ellison allegedly had a negative balance of $1.31 billion in May 2022. All FTX accounts display negative balances if the user has a negative balance for a specific reason, such as a payment that was not received or the user was in debt due to margin positions. The alleged Ellison documentation shows an enormous balance that no ordinary user would have, including a negative amount of FTX equity. Customer funds totaling $1.31 billion that were stolen and lost. According to the document, the user's negative balance owed or held in a margin position indicates a massive amount of FTT, Megaserum, locked Megaserum, locked Serum, locked Maps, Solana, Ethereum, Bitcoin, and millions of dollars in stablecoins. The user's balance, which is allegedly linked to Alameda CEO Caroline Ellison, shows that nearly every account is in the red, totaling $1.31 billion. According to Caroline Ellison, FTX gave Alameda Research a lot of credit. FTX effectively extended a substantial amount of credit to Alameda Research, and in the end, that margin position became severely stressed, and it blew out. A negative $1.31 billion margin position, as disclosed in the FTX documents, is a massive hole. Margin positions are trades made with borrowed funds, and if the trader is unable to maintain the minimum required margin, the position is usually liquidated to repay the borrowed funds. The large margin position shared in May 2022 occurs around the same time frame as the Terra Luna debacle.
What has been your worst trade? Like the worst situation that you have ever had that you were, you lost a ton of money, if it happened, right? Yeah.
Yeah, I'm trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
I'll generalize, some sort of an example of kind of what happened without necessarily saying it was this position specifically, right?
Yeah, I think there have definitely been examples where, say, we, lost some money because we decided to put on some large discretionary position, and we thought it was a good bet, but it went the wrong way, and that's kind of like a thing that can happen a lot, and you have to say like, well, maybe you reevaluate and say like, oh, maybe this wasn't a good idea after all, or maybe you're like, well, it was probably good in EV, but it didn't work out, and that's the EV is more important than the realized P&L there.
Yeah.
Bankman-Fried said that Alameda failed to hedge against an extreme crash in the crypto markets, which ultimately came to pass last year. As Alameda became illiquid, FTX International did as well, because Alameda had a margin position open on FTX. Sam Bankman-Fried blamed the collapse of his now bankrupt FTX exchange on a broad crash in cryptocurrency markets.
Best I can tell, Alameda did have a big position open on FTX. That position, I think, was very over collateralized a year ago. There was a total market collapse, and specifically a large correlated collapse in its assets over the last month, and to some extent over the last year, that threatened that position quite a bit. And I think that's, as best I understand, a lot of what happened there.
Alameda traded heavily on the FTX platform, meaning it sometimes benefited when FTX's other customers lost money, a conflict of interest that Mr. Bankman-Fried sometimes seemed uncomfortable discussing in interviews. According to Ellison, if Alameda's FTX accounts had significant negative balances in any particular currency, Alameda will borrow funds that FTX's customers had deposited on the exchange. She said she and Bankman-Fried agreed to conceal this arrangement from lenders and crafted false financial statements to hide the amount of Alameda's borrowing, including billions in loans made out to FTX executives. She claimed that she and Sam Bankman-Fried knowingly misled lenders about the amount of money borrowed from the cryptocurrency exchange.
Caroline Ellison said that you all knew that these funds were put into Alameda. They were the funds owned by your depositors.
So I can't speak for who knew what. A lot of the customers on FTX did have, borrows either, in dollars or Bitcoin or euros.
Caroline Ellison has since apologized, saying she knew what she was doing was wrong, and that she is truly sorry for defrauding customers, investors, and lenders in pleading guilty to criminal charges stemming from the cryptocurrency exchange's collapse last month. However, this is only the half of what happened to other FTX funds. To know what happened to the rest of the funds, watch the video in the end screen.